Are criticisms of the Fed and its credibility okay?
So listen, I think the Fed made one mistake. By the way, what I think they're doing now is brilliant. You had to take the pressure off you had to cut rates 75 basis points. You had to take pressure off the dollar because the rest of the world was cutting rates. People don't realize the Fed can't just operate domestically. It was global growth that was a concern. It was the dollar. When the dollar appreciates, it impacts global growth. It impacts the emerging markets. So they had to do what they did. Listen, the one thing that we challenged on your show, that we challenged the Fed on, you think about it, at the end of last year, and Chair Powell's come back and talked about it, they should not have kept going. When they were pressing rates higher, what happened in December, you had a Fed that was raising rates and draining liquidity, reducing the balance sheet. They went too far. By the way, they went too far when the mortgage market, when the housing market was starting to come under pressure, the automobile market was starting to come under pressure. That's the criticism I give them. I think they went a bit too far, but what they're doing now, I think they're spot on.
You have an outlook, and I asked Jeffrey about this too, the outlook for the 10-year. He was willing to say he thinks it's going to go, 2.05 around that. Mm-hmm. You're not convinced we're going over 2%. Why?
No. So I wouldn't come up with somewhat reasonable numbers, similar numbers to that. So there's a crazy thing that's going on that we've never seen before. So you take what the Fed is telling you now, they're going to let inflation run hotter. That would normally steepen the yield curve. That would let interest rates move higher, longer interest rates move higher, particularly if, like we say, we think growth is going to be okay in the next year. However, you're going through the most extraordinary dynamic I've ever seen, where negative interest rates keep the bid from overseas profound in the marketplace. And I'll give you one stat. Next year in fixed income, we're going to have $700 billion less supply than we had this year. And the demand's going up $1.5 trillion just based on demographics, pension, insurance demand. So it's hard. When people say rates are going to move much higher, pretty darn hard for that to happen. So I think we're going to be in a range. We could drift a little bit higher in decent growth. If you get a trade deal, we'll drift a bit higher. But I don't think we're going very far because you've got this unbelievable supply-demand dynamic. Mm-hmm.